episode of Bullish Chips, where we talk about chips and only chips. More specifically, the Direxion triple leverage semiconductor bull ETF, which goes by the ticker symbol of SOXL. My name is Chris. Today is Thursday, July 10th, and we had another decent day in the market today. From an intraday perspective, from a long term perspective, it was a positive day as well. Not a hugely positive day, but it's a continued push to the upside, and that's what we like to see. Keeps our swings going up in profit, negating any theta they may have on them. But today, we'll talk about the intraday first and zoom out to continue to get the continued look at the longer term picture. So first, we're looking at the 15-minute chart. We can see we had opened up significantly higher than where we closed. It wasn't quite a gap up. We didn't open above the yesterday's high, but we did push higher than yesterday's high to give us a two up, and then immediately failed. We did capitalize on a put. We waited for the lower high on the 5 minute, and as soon as we breached the downside of this candle, we bought a couple puts and rode them down. If you follow us on Twitter, you saw our entries and exits. And then once we had the essentially higher low right here, it wasn't a true higher low because we only went one on this candle. But once we tried to push down again, didn't breach the bottom of this candle and wicked up, and not only wicked up but turned green. Once we breached the high of this candle, we went ahead and entered longs. We grabbed a few with the July 18th expiration, the July 25th expiration, and the August 15th expiration. We ended up slightly profiting. Yeah, we stopped out slightly profiting on the July 18th expirations, and then we held the July 25 expirations and the August 15 expirations. So, got a little bit of profit on the day to the downside, more than we did to the upside, but a little bit each way makes for a decent earnings for the day, and couldn't be more happy than that, especially because we have our longer term swings for September, November, January 26, and January 27. Those continue to push to the higher to the upside as well. So let's go ahead and bring it into our day trade chart and look how the levels were respected. What in the heck? Did I not update this one today? That doesn't make sense. Yeah, so we've got our opening print up here, but let's go back to this chart so it's a little less messy. So, like we said, we poked up. We have the daily broadening right here. That's why we took the lower high underneath the opening print, which was basically double trouble, as they say, with the overnight high. We took that. First target, of course, is the close of yesterday, taking out this kind of intraday gap that we have. Not a true day-to-day gap, but this intraday void that we have. This, overnight traders, it's not a lot of volume, so it's easy to go back through that thin structure, or what looks like is no structure there. And we went ahead and got down on the 1 minute to get our exit. Again, if you follow us on Twitter, you can see our entries and exits, and we pushed back to the upside. So kind of like yesterday, after the push back to the upside, it was a good, pretty quick push, but then just went sideways. Actually drifted down a little bit. Let's see, and after hours were down. So that might have to do with the 30, 30%, 35% tariff, I believe it was, that Trump said was going for Canada. The markets did react negatively towards that. I did see before I jumped on to make this video, so that might have something to do with it. But we'll see how things look in the morning before the market opens up. Lately, we've been getting, fades the night before and then um, pushing up in the morning. So make kind of expect that. If we look at the daily structure though of the candle, or the candle on the day, you can see we've got a doji, and unlike yesterday where we had a green doji, it's a red doji. So we did finish in the upper third, I guess you could say, upper third of the candle, but we did finish red, so slightly below the open. We're showing a couple days resistance now off of this daily broadening formation, strengthened by the second daily broadening formation that was formed, which also has the hourly broadening formation right here. So we're still kind of fighting this monthly downtrend line, this green dash line. Again, if you want a better idea of how I come up with the charts and the different colors of the lines that I have on my charts, make sure to check out the YouTube page. There is a video specifically on how I set up my charts. Again, I'm not a financial advisor. This isn't financial advice. So, you know, take it, scrutinize it. I'd love to hear any feedback of anything you don't agree with how I set up my charts. But just kind of use it as another tool in your chest. Do your own research, make your own trades. You know your risk tolerance. So these are just how I see the charts and what I'm doing throughout the day, and over time, with just this ticker SOXL. So looks like I didn't remove the opening print from yesterday. Okay. So looking back on this again from the day perspective, we're hitting this daily broadening formation. We're still fighting this monthly uptrend, but look how close we are to flipping the year back green. Right, 28.13 flips the year back green. We're sitting at 27.37, so less than $1, and we're back green. And the expected move for the week, this purple box, takes us above that. So we'll look at what the expected move is for tomorrow here in a second. Because it is Friday, and a lot of people like to play 0 DTEs. I don't particularly play 0 DTEs. If there's a super A plus setup, then yeah, I'll grab one. But it's not something that I'm looking to try and scalp. If you follow how I trade, most of the time the shortest I'll go, I may get a weekly at the beginning of the week, but as you can see with how I got out of my contracts for next Friday today, once you get past Wednesday and you're in like Thursday, then a contract that expires next week is really kind of like a weekly at this point, especially from a theta perspective. That theta decay grows the closer you get to that expiration. So once we get to Wednesday, I normally don't buy contracts for the following week. I will go 2 weeks out from there. So, and normally I like to only buy monthly expirations. I did mention earlier that I did get some contracts today for July 25th, so that is a little uncharacteristic of me, but it was more for an overnight swing, possibly swing into Monday, depending on how Friday plays out, type of play. Not risking a whole lot. Only three contracts I believe that we purchased. So, a little bit of a risk as far as a little bit more risk, I would say, as far as our scale goes. But to some that might not be risky at all. But that's just how we play. We like to use contracts with more time. Gives you a little bit more wiggle room for pullbacks, while still being able to get good profit when it does push. So let's go ahead and look further zoomed out. Let's look at the month. Sorry, not the month, the week. Let's see, we're strong here. Let's get these lines out there. So we're a strong 2 up still. Little wick to the bottom, but that just shows there was no action down there. Nobody wanted it down there. They pushed it up. Again, fighting this monthly downtrend line, trying to flip the year back green. If you look up here to the left, we've got the time frame continuity. So the week is green, the month is green, the quarter is green. The only thing that is not green is the year. If we can get the year flip green, that gets a lot of steam behind us. It gets us above this monthly downtrend line. It gets us solidly above this weekly broadening formation here, and it gets us back into the march, back to the upside, into this hard fought chop area. But it gets us continuing to this upside. So let's zoom back in. The 15. Not really too much else to recap from today, just because the second half of the day, really second 2/3 of the day, was kind of flat. You could scalp in there, but wasn't a lot of magnitude to scalp, so you had to load up on contracts, and just not something we were interested in. Like I said, we were able to get in down here, and kind of just ride this out through the day. We did get stopped out on this, not the last 15-minute, but the next to last 15-minute candle. We got stopped out, and yeah, like I said, not sad with that. Came away with a little bit of profit on the calls. Most of the profit from the day was on the puts, but like I said, we still have calls for the 25th and for August 15th. So along with our longer ones, but I won't go into those again. So let's go ahead and let's look at the expected move for the week. So let's get in here on the swing. Let's take this box, properties. All right, so 2737 is where we're at. So if we go to the trading, the options chains, we can see that for the July 25th expiration, the expected move is $1, and we'll call it 4 cents. So this line right here, that is our expected move for the day. And oops, let's get out of there. So let's go back here. So we said $1.04, right? Yeah, $1.04. So 2737 plus $1.04, 28.41 is going to be our high of the range, and then 2737 minus $1.04 is 26.33, right? So we'll keep those numbers in mind. Just make it easy for ourselves. Oops, quit doing that. All right. So we'll move this. I don't know why we didn't move it for last week, but where'd we go? Edit properties. So we had 28.41, 26.33. All right. There we go. I don't know what happened with the first time. So we can see our expected move is here. It wouldn't quite take us up to the top of the expected move for the week, but it would take us above the expected. The flip on the year, and this is just an expected move. There's no reason why we couldn't go above it, especially to get to the top of the week's expected move, and there's no reason why we couldn't go higher than the top of the week's expected move as well. So we could have a gap up and go huge type of day. Not saying that's what's going to happen. There's not really any evidence to show that would happen, but it just shows that it is possible. But the same is true to the downside, right? That means our downside is right there. It's funny how it lines up with what should be support, right? Funny how all these things line up, but there's no reason why we couldn't fall even further below that. That's putting us back below the monthly downtrend line. That could give us steam to push back down. Maybe test last month's high again. Who knows? We'll play it by ear tomorrow. We stay nimble. We follow our rules, and that's how we profit. We stay consistent and we profit. So we'll be ready to play either way. Like I said, there's nothing to really say, ooh, we're going to run tomorrow. Let's look at the hour, because the hour does look a little better, right? Like, this could be the higher low right here, right? There's plenty of room. We can still push down all the way to this area to create a higher low, but let's say that is the higher low. If we open 2 up, that's a 2 down, 2 up. One combo, 2 down, 2 up. We were triple inside bars on the 1 hour today, just stagnant, going just sideways, coiling up really. So this could be a fake out to shake out any calls, and we could be to the upside tomorrow. At least the target would at least be the high of yesterday, at the very least. But again, we got our expected move here, so oh man, I would really like us to flip this year green. I wouldn't just jump in a bunch more longs just as soon as we flip over. There's probably guaranteed to be a fight around that level between the bears and the bulls. So there'll be some chop, probably some pullback. You'll get an opportunity to get a good entry if we're going to go ahead and push to the upside. It also offers a very good opportunity for us to turn down and have a point of pullback, right? We could break above, draw in a bunch of bulls, that are buying contracts, buying shares, and then flush back below and squeeze them to the downside. So we're coming towards the end of the summer, which is the end of seasonality for technology. Not saying that we're there yet, but anything is possible. So again, we're running up into these daily broadening formations. We've gone above this weekly one right here, right? So we're trying to stay above it, trying to stay above the monthly downtrend line. Things are looking positive, right? Let's look at it from the 4-hour perspective. Let's zoom back in. So from a 4-hour perspective, again, no evidence that we're just gonna fly to the upside tomorrow, right? We had a inside bar on the second half of the day, just like yesterday. So we could get the push up like we did yesterday, push again, get to the top of this expected move, power through that one, get through it, get through this the year flip. But you never know, right? We could go down. We could go down to complete a 2-1-2 rev, but then turn right back around to go make it a 1-2 down, 2 up rev, right? Let's see. It was kind of similar to here, 2 up, went 2 down, but that turned into a 1-2 down combo, 2 up essentially. So the expected move doesn't lend itself either way either. So sometimes you'll get where the expected move is skewed to the upside. You can see that it's skewed to the upside, or you can see that it's skewed to the downside, but today it looks pretty even to both sides, or for tomorrow I should say. So again, we're at highs again. It's not, we're not at all-time highs like S&P 500, due to splits and things like that, but we're at highs. We've pushed really far since the April low. Let's get that week chart up. Let's get this cleaner chart so you can see. Look at that recovery. Straight up. Only a couple down candles in this run. Had to get our footing here, so you can expect it here, but just up, up, up. slight down, up, up, slight down, up, up, up. We've been pushing, so it's perfectly reasonable to get a pullback here. Again, not saying it's going to happen. Personally, don't really want it to happen. If it does, I'll gladly take it, grab shorts when they trigger, and load up on more shares and leaps when it's time to reverse back to the upside. If we're going to reverse back to the upside, that's the joy of this strategy, and the way of this way of trading is you can adapt very quickly to either way. And this charting method, the strat, broadening formations with like one or two Fibonacci's, that can be taken and applied to any chart for any stock, for any commodity. If it's in the quote unquote free market, traded in the free market, then this type of charting will work. So let's get back to the nitty gritty. Let's go ahead and move our lines for our 4-hour markers, right? So we've got previous high a day. We'll move that to today's previous high a day. Yesterday's 4-hour trigger to the upside. We're going to move that to the second 4-hour of today. Yesterday's 4-hour trigger to the downside. We're going to move that here. And then yesterday's low, or previous low a day, we'll move it there. Alright. Just one more chart to do this for. Activate. It's a little annoying, but it goes real quick, and it makes a huge difference. If you know where these levels are at, your bearings are set right from the beginning. So you can look, if you're in there trading low time frames, if you're in there scalping, you know what these markers are, you know where they're at, what they mean, if they are entry points, if they're target points. Let's remove that. And it just makes trading so easy, right? Or not, I don't want to say it makes trading so easy, but it makes it easier than one would expect, I guess you could say. So price level 1. All right. So let's remove the opening print, because we'll have a new opening print tomorrow. Did we move all of the? No, we didn't. So let's move this. Alright, see how easy that is. And boom, that's moved. Now we know what our expected move is for tomorrow. Alright, oops. And there we have it. All right, so easy peasy. We know where our expected move is. We've got our 4-hour markings. Let's get our after hour highs and lows put in. Oops. Come on, Thinkorswim. All right, so let's get our low. And you can see where that big drop is, where Trump made the announcement about the tariffs on Canada. I mean, he did announce other tariffs as well, but most of the other tariffs were like 20%, and Canada was, I believe it was 35. It might have been 30, but it was higher than all the other countries. So let's go ahead and activate this. Let's move our high up here. This is our overnight high. Activate overnight low. These, of course, will probably change overnight. They usually do. So we get back in the morning, log in, and adjust these before the market opens, sometimes even up to the market open, because like today, overnight high was significantly higher. It opened right at the overnight high, basically. Opening print and overnight high were the same level, so I had to mark the overnight high after the market even opened. So let's go over. Let's get our levels drawn, written up in our notes. Let's see, edits. I forgot I need these figures for our notes. Oops. Alright, so let's go to our notes. We're going to duplicate today's notes to make it easy. Friday, July 11th. Notes are from July 10th. Tomorrow there'll be 118 trading days left. The expected move for tomorrow is, 1.04. And there's that. The cancel. Close price is 27.37. Right? So now let's mark out our 4-hour triggers. Alright. Triggers and targets and magnitudes. So it looks like today it'll be triggers and magnitudes because we've got a 2-1, which is an inside bar. So the trigger to the downside is the low of the 1, which is 27.19. 27.19. Oh, and this is a red one. 2 up, red 1, 2 down, right? Yep. So the magnitude is the low of this 2, which is 26.66. Alright, so any targets that would create a combo, a 1, 2 up, combo 2 down. So our next target would be the low of this 1, 26.45. Actually, we'll blow through that. We would make it if we get to the bottom of this. The magnitude of this is 25.89. So really, we need to put 25.89 as a second magnitude and a second strat of 1, 2 up, combo 2 down. Right? 26.66, 25.89. I don't think we need a target. We'll leave 1 just in case we get truly extended in the first half. That would be the low of this candle, which is 25.36. 25.36. So we're getting kind of into the day territory, but let's see. This low is 25.89. Oops. 25.89 is the first lower low. So we've got our lower lows in order. So this is 2, 1, 2 up with the trigger at the top of this 1, which is 27.65. And the high of this 2 is the magnitude, which is 27.73. So from there, we'll leave our targets in place because we never got to those today. So again, the magnitudes of the 4-hour are always the trigger of the 1 day. We're above this 26.72, so we'll make that bold again. So we're in this. We never made the 28. So we're in this strat with the magnitude. I'm sorry, a target of 28.44. We're on our way there, but we haven't hit it yet. So let's go ahead and focus on the day chart. Max 1 day. Let's look at it here. Sorry, I need to get my bearings straight. There we go. So if we're looking just strictly at the strat perspective, this would be a 2 up, 2 down. So we've already got our trigger. The magnitude for that would be 2589. And wouldn't you know that, that's the magnitude of the 1, 2 up combo, 2 down. So the next target would be 2536. Wouldn't you know it, that's our target for there. And technically that would be a 2 up combo, or I mean a combo 2 up, 2 down if we were to get into this candle, and that would be a combo 2 up, 2 down still if we breach the bottom of this candle, which would be a pretty big move, and the magnitude there would be 2462. So we've already got that there. So we've got our lower at 2462. So let's go ahead and look at our upsides. We've got a 2 up, 2 up. So no magnitudes, only a target. So first target would be 2813, which we've already got. 2868 was our next one, which we found from a fib extension here, 2868. Right, that was this move from down here to up here. Let's get out of this messy chart. So our next target will be 2967. 2967, that's if we need it. So that's somewhere in between here for these targets, right? So that's good that we have that. So just like that, we've got our targets. We've got our expected move of $1.04 for tomorrow, giving us a range of 28.41 to 26.33. Expect that we will move somewhere within that range. Again, that doesn't mean we won't move out of that range, but that's just what the market is determined the move will be for tomorrow, or predicted what the move will be for tomorrow. So let's get back over here on the charts. Let's bring out this. So again, just looking at it from the day perspective, huge move, slight pullback, huge move. Would be reasonable to expect a slight pullback. We're getting further and further away from this gap, so gaps always like to get filled. It doesn't mean that it's going to get filled right away, but it's just another gap to add to the gaps to the downside here, and they're gone now because we've gone through them, but I mean there were gaps to the downside here, right? I had targets going all the way down to this monthly broadening formation, right, this green line. So just like there were gaps that this filled, we can always come back and fill these gaps as well before we go up. Frankly, that might be kind of nice, especially if we're going to get like rate cuts in 27. If 27 is just going to rip, let's go ahead and get these out of the way now. Otherwise, it just means we're going to keep pushing higher and higher and higher, and it's that bigger of a pullback, or at that point would kind of be like a crash at that point that would bring us back to fill these gaps. So not something that we would want to look forward to. We would want to kind of knock those out now, not have any more to the upside when we go back up, and just have a slow grind all the way up. Let these these leap contracts clock up. As soon as these July, but as soon as these June 26 contracts are released, we'll be definitely looking for an entry somewhere on like the week time frame, most likely. Maybe day, just depending on the how the market's pushing and everything like that. Because again, if we're up here, we're in full time frame continuity. You kind of take your pullbacks where you can. Let's see, week. You kind of learned that back in early 23, but definitely 24. Just take the pullbacks where you can and ride it. We can always sell calls on the way down. We can always buy puts on the way down. If you want to play the wheel strategy and sell with cash covered puts, so that you get premium, and then you have to purchase the shares at the end of that, and you own them at the price that you would want them at. There's all types of things we can do when we're going to the downside. There's like no reason to fear the downside. I'm not saying downside is good, because that usually means something negative is going on in the economy or about to go on in the economy. So they say the market does front run the market, but I mean the economy. So pulling back in the market isn't always a good thing, but it doesn't give us something to capitalize on, but it allows us to continue to make money while the market is pulling back, and we can do things like buy more shares at a discounted price, or just, if that's what you need to pay bills, you can pay your bills. So nothing to fear. We've been in a good push. We just continue to ride it. Not really a whole lot to say. You can see here, I don't even look at RSI, but I just happen to be looking down here as I move the chart. RSI is not overbought at all. You can see back here in 23, 24, it got really overbought, so we're nowhere close to that. Just looking for a continued push. Just continue to monitor our swings for August, September, November, January, and January. So I guess that's really it for the day. If you have any questions, leave them in the comments. If you don't like something about the video, let me know in the comments. Do it in a constructive way, if you don't mind, please. I'm always open to constructive criticism. But yeah, do all the YouTube stuff. Like, comment, subscribe. Make sure you turn on your notifications so that you know when I post the nightly videos. Tonight is being posted a little bit later than I normally do. Apologies for that for anyone who may have gone to bed. But if you have gone to bed, if you got the notifications turned on, then in the morning you'll know that I've uploaded the video, and hopefully you can watch it before the market starts. Hopefully everybody gets up with plenty of time before the market starts to get adjusted, get in, see how things are moving in pre-market, and really have a plan to go into the day, and not trying to start a plan after the market's already open. So we will be at market open, most likely just monitoring our swings. Just depends on how we open. If we are gapping up hugely, we may sell one of the contracts that we have for the 25th, just to take in some profit. We would have two more left as runners, and we could, especially if we get a gap and go, scale out of one more after that, leave a runner. If we say we gap down for whatever reason, no worries. We've got plenty of time on those contracts. We'd have to manage them. Don't want to let them get too red. They closed green, so that's positive. But if they get too red, then kind of cut those loose, and especially if the price action is showing that a pullback is looking like it's around the corner. So not really expecting that, but I'm still open to it and still watching for it. Just ready for a positive day tomorrow. Whatever direction the market goes in, we're gonna profit. So hope everyone has a great rest tonight, wakes up refreshed. Have a great trading day tomorrow on Friday. Don't overdo it on like 0 days expiration contracts. Let's just stick to consistent profit every day, and just watch how the account continues to grow. Thanks again for watching Bullish Chips. Have a good night.